In this presentation, we will be taking a look at how bank feeds might fit into our accounting system. Let's get into it with Intuit's QuickBooks Online. Here's the test file we'll be taking a look at. It's called Get Great Guitars. It's going to be our company file within QuickBooks Online. Now, first we want to think about what's going to be the flow of our normal accounting system before we enter in the bank feeds. Just a cautionary note, if you don't consider what the flow is before you start importing a bunch of different bank feeds, you will almost certainly end up with a mess with a bunch of different feeds, a bunch of data you don't know what to do with. You might end up, in other words, with duplicated data or data that's not covering the period that you want to cover, or it's not including the process that you want to be included. Obviously, every company is different, but we're going to talk about some of the core needs or the core factors which would differentiate how we might use the bank feeds. To do this, we're first going to be going into the QuickBooks desktop just to take a look at the flowchart. The QuickBooks desktop will be having a flowchart. We will be bouncing back to QuickBooks Online when we go into the bank feeds, but I just want to consider the flowchart as we go through this. Note the flowchart here is broken up into the cycles. So we have the vendor cycles or the accounts payable cycles or the purchases cycle, you could call it. We have the customer cycle or the accounts receivable cycle or the income or revenue cycle, you can call it. And then we have the employee cycle down here. Now note that we can break out the processes that we will be using into these cycles. This is a handy way, useful way in order to consider the different processes we will have. As we go into each process, note we're looking at a spectrum really. Oftentimes we're breaking down and trying to think about, are we wanting to use more of an accrual basis system or a cash basis system? Now, when you hear those two terms, they're said as if they're binary terms, as if, you know, there's no interchange between the two of them. That's not quite the case. That's not really the case at all. Really, most companies are going to be on some type of spectrum between the cash basis and accrual basis. It's just a matter of when are you applying more of a cash basis system and when are you applying a more of an accrual basis system and why. So in other words, it's quite possible to be more on a cash basis for the vendor section and more on an accrual basis for the customers or receivables section. Just logistically, how does that work in your company? It might work well to have that kind of system set up. So when we think about that spectrum, we can think about the spectrum in terms of cash versus accrual, and we could break down cash versus accrual by, you know, different processes, the different processes that we'll be using, whether we're going more towards a cash versus accrual, and that'll help us to think about, well, how are the bank feeds then going to fit into that particular process? So let's break this down by section here. If we have the vendors then, oftentimes, small companies might be more on a cash basis for the vendors. In other words, the full cycle for vendors would be that you were going to have the bills, you enter the bills into the system, accounts payable goes up, and then the other side is going to be an expense. And then so that liability goes up, and then you pay the bill. And once you pay the bill, then the accounts payable goes down and the income or the cash goes down. So what you have then is accounts payable. That account is an accrual account. When you're tracking the people that you owe in the QuickBooks system, when you look at accounts payable, that's an accrual account. If you use accounts payable, then you have to consider, well, how's accounts payable going to be in consideration with the bank feeds? Because the bank feeds are going to basically show the cash transaction going out. And obviously you need to tie out the cash transactions to the bills that have been entered into the system. So possibly under that situation, you might think, well, I want to enter the bills into the system possibly if I want to be on an accrual basis, and I actually want to track the payment of the bills as well. I want to enter the checks because when I write the checks, I would like to write the checks and know that they would win out. And then when they're cleared, that's great that I want to be able to check that they're cleared from the bank. That's the full bookkeeping system typically. And under that system, then basically you would be using bank feeds. The bank feeds would be matching. You'd have a duplicate transaction. Once the bank feed decreases the checking account, you had already entered the check, and you would need to tell QuickBooks, hey, this is a duplicate that we've entered these in, and you need to basically tie them out. And the bank feeds would then be kind of a checking field on that. You can match those transactions. And that's typically the normal bookkeeping process because you enter the check into the system yourself, wait till it clears the bank, and then double check with the bank that it has cleared. And if you go through the accounts payable, then you want to be able to consider the AP bill compared to the check that you typically enter. Now, you might want to go towards a cash basis. You might say, hey, look, I don't really need to go through accounts payable. Possibly all your transactions for the payments are electronic transactions anyways. So maybe you're just saying, hey, I'm just going to depend on the bank. I'm going to be completely dependent on the bank. I'm going to set up all my transactions as automatic feeds that are going to be electronic transfers that are coming directly from the bank. And then I don't even enter them into my system until I see them on the bank statement. That's if you set up that system, you're basically on a cash basis, which many small businesses would be, and you're not going through accounts payable. You're not entering the checks into the system. Everything's electronic possibly, and therefore you're completely dependent on the bank. In that case, it would be very easy under the vendor cycle of things to simply set up bank feeds and be completely dependent, not record anything until it actually hits the bank. I'm not recording the bill. I'm not recording when the thing happened. I'm just waiting until it clears the bank. The bank then has that information, and I record the cash going down and the related expense at that time. So if you're using that system, then the bank feeds can be really pretty easy because you don't have to match them up against anything else. You're just completely dependent on the bank in that case. Now, if you buy inventory, note you have a different level of kind of complexity there. If you're trying to track inventory within QuickBooks, then you're going to have the purchases of inventory, and you're going to have to make sure that you're able to put on into the system the tracking of the inventory. If you're not tracking inventory within QuickBooks, or possibly you have some other system outside of QuickBooks to track your inventory, then again, that's more, you might be able to go more on a cash basis, and that might be easier to do. What about the customer section down here? Full service customer section typically would be if you're in like a billing a situation, if you're in like services, a legal firm or an accounting firm, you typically do the work first. You invoice the client, accounts receivable goes up with the invoice and sales are recorded. Then you receive the payment. And typically QuickBooks has another step that you take those payments and batch them and then put them into one deposit that would go into the bank so that the deposit matches what you'll see on the bank statement. So if you think about that process, then note that the invoice is creating people owing you money. That's accounts receivable. So if you want to track accounts receivable, if you're in the type of industry where people are paying you and you're tracking accounts receivable, then you got to think about, well, how am I going to, fit the bank feeds into that system? Because I want to still use QuickBooks to make the invoice. And every time I make an invoice, it's going to increase accounts payable, and the other side's going to go to basically revenue, and then I would have the receive payment. So in some way, if I'm just going to enter the invoice and then kind of depend on the bank feeds to match up the deposit to the invoice, then I need to have some system where it can do that. So when the deposit comes in, I can somehow match that up to the invoice. Or possibly I enter the invoice, then I get the check in the mail, I record the receive payment, and then record the deposit possibly, and then simply use the bank feeds to match up or tie up the fact that double checking the fact that I got that deposit, just to double check that deposit. And that would be like normal kind of accounting, full service type of accounting, where you're not completely reliant on the bank. You're using the bank as a double check that you have entered the information properly. Or you might be saying that you have a store and you do the work at the same time, like a food truck or something like that. And in that case, you might get paid at the same time you do the work as the same time you provide the food. And in that case, you'd have a sales receipt, which would typically be increasing the revenue and increasing cash or undeposited funds, which you would then take to the bank. So again, if you do that, you kind of want to track the sales receipts that you have received, then go to the bank, make the deposit, and then double check with possibly the bank feeds and reconciliations that the deposit cleared the bank in accordance with your records. That's a double check that would kind of be there. However, if you want to be completely dependent kind of on the bank, use the bank feeds. You could say if you're on a completely cash basis, you could say, yeah, I make sales and then I receive payments. I'm not going to put anything through accounts receivable. I'm just going to basically make sales and then have a deposit, possibly electronically going into the bank. And then any deposit I see in the bank is basically revenue. If you're going to use that system, you can say, I'm just going to say every deposit I get into the bank is going to be revenue. I'm going to put that to revenue. Maybe I won't know then. I might not know the detail, such as who's the customer and whatnot. The invoice, I'm not tying it out to the invoice or anything. I'm just on a very basic system saying, you'll see how much information you're lost there if you use this system, because you won't know the customer and whatnot. But again, if you have a lot of transactions, depends on the type of industry, maybe, that's not as valuable, the information. So you're just dependent in that case on a cash basis to just look at the deposits and then record them into the system as revenue. Any deposit I see is typically revenue, unless it's a loan or some money that I put into the system. And so on a cash basis, that's where you'd be more dependent there. What you're losing from that basis, of course, is the fact that you don't have the double checking mechanism, and you're not recording information such as possibly the vendor and whatnot, which may not be there when you just look at the deposits at the end format. So in other words, if you have accounts receivable or accounts payable, you got to think about, how am I going to fit in my use that I want to use accounts receivable or accounts payable with the bank feeds that we'll put in place. And then, of course, you've got payroll. If you deal with payroll, you'll have to think about how that's gonna work as well, because the payroll checks will be coming out through the bank feeds, and you'll want to have some system to match up the payroll checks to the payroll that you have processed in some way, shape, or form as well. Possibly, you can have a third party maybe helping you with payroll, like Paychex or ADP, and then once again be kind of dependent on your system to have the paychecks come out of your system and record that. But again, it's a little bit more complicated when you deal with payroll, because you should be recording the payroll liabilities, the payroll taxes, and the payroll expenses. So how are you going to fit in the fact that the bank feeds are only going to show the net check in your system? It's only going to show the net check, and you're going to have to put that in your accounting system to look at the financial data within the system, and also make sure that you're providing the accurate information to the employees, which includes not just the net check, but the gross check and the withholdings that they're gonna need. And again, you might need QuickBooks services to help you with that, or you could be working with an outside like an ADP or a Paychex. But whatever you do, obviously the bank feeds aren't just gonna solve it for you. You're gonna have to kind of figure out how that's gonna fit into the system. So if we look at the financials, if we go back to QuickBooks and just take a look at a balance sheet, if you were to analyze your system and you go into a balance sheet such as this, if you see an account called accounts receivable that's tracking the customers that owe the company money, well, then you're going to say, this company likes to use invoices. So, maybe they just use invoices and they don't really track the AR, or maybe but they're going to have to, if you're using invoices within QuickBooks, then it's going to record a transaction. And therefore, you're going to have to figure out how the bank feeds are going to fit into your invoicing process. Because when you record an invoice, it's going to increase the accounts receivable and increase sales. If you want to use invoices or you want to use QuickBooks to track the accounts receivable, then you are by definition on an accrual basis with regards to that particular process. And you'll have to think about how the bank feeds are going to fit into that process. The same is going to be true with accounts payable. If you're using bills, if you're entering bills, you're going to result in accounts payable. If you want to track the bills and pay the bills off, then you are by definition on an accrual basis with regards to that particular process. And you're going to have to figure out how the bank feeds then will fit into that process. On the income statement side of things, note, if you think about the accrual basis versus the cash basis, when you make the invoice and you have the accounts receivable go up on the invoice, that's when normally income is recorded with QuickBooks or on an accrual basis. So when the invoice is generated, even though cash is not received on an accrual basis, that's when the income should be recorded with regards to that basis. So it just depends. Accrual is typically thought of as the better standard to measure things for comparability purposes than cash. But you need to know which system you're on with regards to whatever process you're looking at, or else you'll end up recording things twice, right? If you enter the invoice, then you have the deposit that goes through the bank, and you put both of the other sides to income, then you may be double entering on the income side. So again, if you're using the invoices and you're using and you want bank deposits, you got to make sure that it's in the system somehow, because the invoice is going to be recording the revenue. The same on the expense side with the bills. And again, a lot of small companies with regards to their expenses may be more on a cash basis. They may be perfectly fine just using electronic transactions. They may not be using checks that much and just be completely dependent on the bank. On the income side, however, Many small businesses like to use QuickBooks and be able to invoice, maybe just like the form that use the invoice, but every time you make an invoice, you got to realize it's recording a transaction, right? And so it's going to record a transaction, and then you're going to have to think about how the deposit's going to work in that. Other companies really like to track their accounts receivable, who owes them money, in QuickBooks, and that's a really useful tool because, you know, tracking who owes you money is obviously that's an important thing. And if that's something you're going to be using, then again, how are the bank feeds going to fit into that process?